Hello my fellow investors and welcome back to the stock analysis video. And today guys, we're going to take a crack at another one of your recommendations, and this one is by the company called Target Hospitality, which was brought up by the commenter Daniel Wen. So thank you very much for the comment. You will see this on the 16th, i.e. tomorrow, as if I'm recording this, it is the 15th. And again, thank you so much. Today we're going to be analyzing the company Target Hospitality, taking a look at their fundamentals and see if the current share price this is looking like a buy. So with that said, let's get started with this analysis. So let's get started with what the company does, because I personally have no idea. Target Hospitality Corp operates as a specialty rental and hospitality service company in North America. The company operates through four segments of Hospitality and Facility Services, South Hospitality Facility Services, Midwest Government, and TCPL Keystone. It owns a network of specialty rental accommodation units. In addition, the company provides catering and food maintenance, housekeeping, groundskeeping, security, health, and recreation. So basically, guys, they provide hospitality. I mean, it's literally in the name. So very, very interesting kind of company. They are in the consumer discretionary, and their industry is hotel, resorts, and cruise lines. Very, very interesting to say the least. So now let's come into the calculator. We got the ticker symbol for TH, market cap of $1.7 billion, a P of 23.11, and a current share price of $17.08. Taking a look at the share price, guys, we can see a massive rise on the 1 year of 225%. Absolute insanity. Year to date, guys, it was, well, it's actually up 16.57%, still a lot. As at the beginning of the year, it was $14.85. And on the year to date, guys, take a look at this, $5.26. But that's not even the best of it. Looking at the 52-week range, well, the lowest, guys, was $4.68, and looking at their peak, it is $18.48. So with a current share price of $17.08, we are definitely at near all-time highs. They do not pay out a dividend, which means that all of their cash flow is going straight into themselves. And taking a look at their average 5-year free cash flow right here, we can see that it is $42 million, and their last free cash flow is $185 million. Showing that's a pretty big increase when it comes to their free cash flow, to say the least. So now, guys, let's come into the fundamentals. Starting with the net income, we got 5 years ago of $5 million, 1 year ago of $73.9 million. That is an increase of 1,378%. Now, the thing with this, guys, is that we could see a pretty big drop from 4 to 3 years ago, but 3 years ago was COVID, so I'm going to give them the benefit of the doubt on this one, especially the kind of industry that they're in, hospitality, right? You know, during a pandemic, people were like, nah, we don't want you coming in my house, right? We don't want to do that. So that kind of explains that negative 25.1 million. And then 2 years ago kind of explains as well, right? 2021 was still a little bit iffy, half and half kind of, negative 4.6. And then we just saw a massive spike, guys, 73.9 million. So I'm going to give this a 20%, mainly because this 73.9 million is not justified by these 5 and 4 year ago numbers. If this was around like, let's say like 20 million or even like 25 million, sure, I could be like, yeah, it's a little bit of a spike, but it's not, you know, it's not that much of a spike. So for that reason, I'm going to give this a 20%. Looking down at the free cash flow, this one came as a surprise because, well, we can see that 5 years ago, it was $53.5 million. Sorry, that was negative $53.5 million. 1 year ago of $185.3 million. That is an increase of 446% with an average of $42 million. Now, the thing with this is that from 5 to 4, they were in the negatives, right? Negative 53.5 to then negative 24.7. But take a look at this consistent increase, right? Negative 53.5, negative 24.7, 34.2, 68.7, and then a massive jump from 2 years ago to 1 year ago from 68.7 million to 185.3 million. So even though we do have two negative values over here, the fact of the matter is that they're still, essentially they were still very consistently increasing this. So I gave this an 85. I'm actually going to decrease this a little bit to like a 75, mainly because, well, there's still a massive jump from 2 years ago to 1 year ago by $100 million, actually more than $100 million. But even though we still have two negatives, guys, the fact of the matter is that, you know, we want to see consistent growth, and this does show that. So I'm going to give it a 75%. Looking at the revenue, we got 5 years ago $240.6 million to 1 year ago of $502 million, increase of 108.65%. We can see a nice good increase from 5 to 4, then a dip because of COVID related 3 years ago, a slight increase once again, probably 2 years ago because things were starting to loosen up, and then a massive jump to $502 million. So for this reason, I'm going to give this a 70%. Looking at the total assets minus total liabilities, we can see that, well, they've been in the positive in the past 5 years. However, after 5 years ago, they just went down. Now you could say, well, COVID, right? Yeah, but except that this happened 4 years ago as well. They went from what, 349 million to 120.5 million. And then, okay, COVID, they brought it down, 3 and 2 years ago, but then they brought it back up 1 year ago. So, yeah, it's okay, I guess you could say. But the fact that this happened 4 years ago is very, very concerning. Average total assets, it is $638.4 million. Average liabilities is $495 million. Doing this difference, we get $143.6 million. I'm going to give this actually a little bit of a higher grade. I'm going to go with like a 40% on this one, mainly because, well, they were going up from 2 to 1 year ago and they've been in the positive. So yeah, I'm gonna give a 40%. Looking at the cash flow minus liabilities, very, very interesting because the lowest point was 4 years ago at negative $505 million, and we can see a pretty good increase from 4 to 3 to 2 years ago. And if we take a look at the cash flow there, guys, well, 4, 3, and 2 years ago weren't that, I mean, sure, they were increasing, but it wasn't like a massive, massive amount of positive free cash flow. So the fact of the matter is that this decrease right here, probably due to the fact that their liabilities were probably going down, and also just the fact that, their cash flow was also going slightly up and into the positive. So yeah, it's not looking too bad. And even though, guys, this is looking pretty good from 4 to 3 to 2 years ago, they did brought it slightly back down to $385.6 million in the negatives 1 year ago. So unfortunately, as of 1 year ago, we are slightly less than that of the average, which is $381.72 million. So I'm going to give this a 40%. Now, when it comes to the shares outstanding, the bulk of this increase was 5 years ago to 4 years ago, going from 41.3 million to 95.8 million. But on the 5-year scale, this was 41.3 million to 97.6 million, increase of 136.32%. Now, I'm actually very concerned about this. Sure, there was a massive spike from 5 to 4 years ago, but just even if you ignore that, take a look at this. 95.8 4 years ago, 96 to 96.9 to 97.6 to 97.6. So even aside from just this jump from 5 to 4 years ago, this is still a very consistent increase from 4 to essentially today. So that's why I'm actually going to give this a 15% as a grade. And lastly, looking at the cash and coins, they currently hold $181.7 million with an average of $68.8 million. So taking a look at the overall grades, we gave them an income of 20%, free cash flow 75%, revenue 70%, assets minus liabilities 40%, cash flow minus liabilities 40%, shares outstanding of 15%. Overall grade of 47. The cash flow is actually not that bad. Revenue is not that bad. The issue that I find here is the assets minus liabilities and the cash flow minus liabilities. Pretty much their liabilities, the shares outstanding, and their net income is mainly the issues. But honestly, the cash flow and revenue are not that bad. It's very, very surprising. So this may be a situation that you may want to buy it. But for me, guys, 47%, yeah, they definitely need to fix a whole lot in my personal opinion. So let's come over here into the discounted free cash flow and let's make some assumptions. Now, let's come over here into Seeking Alpha. We can see that the forward revenue is estimated at 20%. Now, you guys know me. I'm not really a fan of going along with what Seeking Alpha is saying, especially when it's those kinds of numbers. 20% is massive, right? So I think I'm going to be a little bit more conservative on this one. However, I kind of believe that 20%, honestly. But for this kind of example, I'm going to go with 10% for the lowest assumption. Let's go to 12% for the highest assumption. Sorry, for the median assumption, and let's go 14% for the highest assumption. Now for the predicted share buyback, we did see that they're issuing shares, and I know I didn't cover this, but they are increasing shares at around like 0.75% from the previous year to the current year. So let's say something along the lines of that, right? Let's say every single year in the next 4 years, they make another increase of around 0.75%, right? So let's actually put over here, let's say 0.75, right, times, and we are going to say, let's say 4, right? So actually, no, it's not 0.75, sorry, it's 0.0075, there you go. So that would mean 3%, right? So then let's increase it to like 4%. for the median assumption. I keep confusing the medium and the high assumption. And let's say 5% for the highest assumption. And with this, guys, well, actually, oh, I am so sorry. I forgot that this is a negative. So let's actually turn this into a negative, and let's flip all of the numbers actually. So let's go with 5 for the lowest assumption, right? So -5 for the lowest assumption, because again, they're issuing shares. Let's go with -4 for the median assumption, and let's go with best case scenario at -3, meaning that they're going to continue doing what they have been doing in the past couple of years. So with this and the required rate of return of 10%, we get the target share prices of $2.20 to $2.55. Now, adjusting for debt, this goes up. Turns out that they actually have a lot less debt than cash on hand. This goes up by around 33 cents or so to $2.53 for the low assumption to $2.90 for the highest assumption, with a margin of safety of 5, 10, 50%. This is between $2.50 to $2.75. By the way, that was $2.15. I said that a little bit fast. Probably some of you guys probably heard $2.50, $2.15 for the 15% lowest assumption, and $2.75 for the 5% highest assumption. So as it currently stands with the current share price of $17, this is looking very expensive. Now, let's actually change some of these numbers, right? Let's actually change some of these numbers, and let's say that for the highest assumption, let's say that they'll match the 20% the Seeking Alpha is saying, that the forward revenue is saying, and let's say they'll beat it slightly to, like, let's say 22%. For the media assumption, let's go down to around, I don't know, let's go down to around like 18. And for the lowest assumption, let's go down by another 4. So let's say at around 14%. So with that, now we get $2.50 to $3.28. Not adjusting for debt, $2.84 to $3.63. And then with a margin of safety of 5, 10, and 15. Highest margin of safety, lowest assumption, $2.41. Highest assumption, lowest margin of safety, $3.45. So even still, guys, this is still looking very, very expensive. So a lot of you guys that may look at this may be like, no, there's just no way, that will never happen, etc., etc., etc. Well, let me just remind everybody again that the 52-week range was $4, around $4, right, to like $18. So this company was at around this range back then, just a few, well, within the past 52 weeks, within the past year. So it was there. The fact that it just shot up massively because, well, let's face it, COVID regulations aren't really a thing anymore. And if they are, there's like very, very minimal of it. And, you know, that shot this company up massively. Sure. But at the end of the day, in comparison to what they're providing us, the people who invest in them, it's not worth $17. It really just isn't, right? It should be worth something along the lines of like $3, $4. And, you know, you can even make the case that if they buy back shares at like, I don't know, 5%, if they start buying back shares, right? And then let's say that they increase the revenue 30%. Well, 30%. Well, now it's $4.51 and $4.88 for the highest assumption, right? So again, it really just depends as to what you believe the revenue growths will be in the future, if they're going to be buying back shares, etc., etc., etc. But even then, guys, it's still going to be a massive, massive revenue increase to justify this kind of $17. In fact, let's just see if I can get this. Let's say 150%. No, so 150% ends up being $56. Okay, so let's say 100%. Is 100% going to give me $23? Okay, so let's say 80%. $15. There we go. So you would need an 80% increase in revenue, a little bit more than 80% increase in revenue to justify the $17 price. In the next 4 years, will they grow 80%? You're telling me that nothing bad will happen. I mean, it's not like we're having an issue with the banking system right now. It's not like that's a thing. And that's not going to impact every other company. Sure, assuming that all of this stuff goes away and that everything goes perfectly perfect, I guess, one way to say it, in the next 4 years, I guess you could justify, 80% revenue growth, but in reality, that's probably not going to happen. I even believe that, even 22% won't even happen. So that's just me. Obviously, this is just my opinion. Every investment is the present value of all future cash flow. Please, guys, do not follow what I am doing to a T. All I'm giving you guys is my opinion, and this is the reason why I'm giving out every single calculator for free, because these things that I have right here, it's a tool. It's a tool for every one of you guys to use, so that way you can make your own decision, not mine. Like, I'm not going to invest in this company. I'll give you my basic opinion on this company based off of the commenter, but aside from that, that's it, right? At the end of the day, every investment is the present value of all future cash flow, and this is not financial advice. Please have these calculators. They're all available for free. This one, book value one, revaluation one, and a dividend tracking sheet. All can be found in the link in the description under all calculators video. You go into that video, and then that's where all the calculators are. So please have them all for free, guys. All we're asking for in return is just like, subscribe, comment. Really does help with the algorithm on YouTube. And of course, share. That's really it. Thank you so much for stopping by on the live stream yesterday. We had a lot of fun. It was great. We got a lot of interaction with KOL, Y1, and I believe Stuffle. You guys are amazing as always. So again, thank you very much for stopping by and just chatting with us and getting everybody's opinion. And also, shout out to Rumble, because we really don't get a lot of interaction there. And the only reason why I have it there is almost like a backup to YouTube, just in case something were to happen. But yeah, Rumble's got, guys, on that live stream, 400, at least the last time I checked, 400, almost 500 views, I believe. Yeah, 500 views on the live stream. Absolutely crazy. So thank you, Rumble. Thank you, Rumble. In fact, we're even getting close to 100 subscribers on Rumble. So if you guys are watching on Rumble, we have not forgotten about you. So that'd be great if you guys could subscribe. I have this channel when it comes to investing. I do mainly fundamental analysis, and boy, my friend that he was on the live stream with, he does technical analysis. So if you guys are on Rumble and you guys are interested in that kind of stuff, you guys can watch it. I also have a secondary channel. The link is in the description below on the Rumble channel, even on this channel as well. Or sorry, on YouTube as well, where I make AMVs, guys, animated music videos, game music videos, using a lot of famous songs and famous and, well, I wouldn't say famous, but like and anime. And in fact, if you guys haven't checked it out, I actually have one on YouTube right now, and on Rumble as well. Avatar: The Last Airbender Warriors, 13,000 views. That is the biggest amount of views I have ever gotten on any video, period. So if you guys don't know about it, make sure to check it. If you guys are watching the investing channel and you guys don't know about that second channel, make sure to check it out, because I want to upload a music video like once a month. It's mainly just for fun, but 13,000 people have watched that one on YouTube, which is crazy. So again, thank you all so much, guys. We really do appreciate it. Again, like, subscribe, comment is the best way you can help us grow overall. So again, thank you very much to YouTube, and thank you very much to Rumble as well. So now taking a look at the options chains. For starters, there really isn't much expiration dates on this. March 17th, April 21st, July 21st, October 20th, 2023, and then it just jumps from October to January 19th, 2024. So not a lot of liquidity when it comes to the expiration dates, and when it comes to the put side, not a lot of liquidity here either. In fact, all the bids are at zero. So yeah, you do not have any way to sell any form of puts on this at any strike. Now for the call side, we do have a little bit of liquidity here on the bid side, $5 for the $17.50, but that's pretty much it. Like, there really isn't much liquidity when it comes to this company at all. All in all, when it comes to Target Hospitality, thank you so much for the recommendation. Sorry that it was so late, but we're slowly getting through these. In fact, we're getting close to almost finishing it. So again, please, that's not, when I run out of content, I will ask for more content in like on a video or something. Obviously, if you guys have a recommendation, I'll add it to the list. But we need to somewhat have like a sorting system when it comes to this, because it got way too overwhelming. It got way too overwhelming way too quickly. So I kind of have a system for it, but I would like to finish all of these before I implement this new system. So anyways, guys, that pretty much does it for this video. Like, if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the YouTube sites. Link in the description below. So with that said, peace out, and I'll see you all in the next stock analysis video.